guys, welcome to the Free Home Buyers Workshop. One of the first people that you need to talk with in the process is your lender. And there's some differences between a bank and a freestanding lender, a mortgage lender, and we usually prefer to work with a mortgage lender. So today I have with me Max Neubauer with Guild Mortgage, and we're going to discuss the process of going through getting pre-qualified, which is so important to buying the home. So Max, welcome. Let's talk about, even a lot of times we'll recommend that the buyer go to the lender first instead of going to a realtor because you want to make sure you have the pre-qualification in place before you even go looking at homes. So talk a little bit about that process, if you will.
Yeah, so the first step you do when you want to reach out to the lender and verify your information. What that typically consists of is a general online application. Find out who you are, where you're from, how much money you make, how much money do you have in the bank, and find out your true needs. So then the first step would then be to run your credit. Credit is a huge factor when it comes to getting a mortgage. As you all know, it highly impacts your interest rate. So wherever your credit is can have a big role of how much your mortgage payment is. So the mortgage payment isn't the same for everybody across the board. Someone with a 600 credit score is going to have a much different interest rate than someone with an 800 credit score. So for first-time home buyers, it's super important to focus on your credit.
And that brings up a really important point. If you're going to be looking for a house, the one thing you don't want to do is go out and buy a new car, get a new credit card.
Nothing with your credit.
Right, just leave your credit just like it is until you close on the property, really. You don't even want to do it a day before you close.
If you are thinking about purchasing a new home, the number one recommendation I say to do first is try to get balances down on your credit card. Typically, the best is under 30% utilization. So easy numbers, if you have a $1,000 limit on your credit card, you want your balance under $300. If it's over that, it's going to directly impact your credit score.
And makes a big difference if you're down under that.
Difference.
So yeah, that's your available line of credit. So that's important that you want to make sure you keep that in there. So okay, we filled out the application. You pulled the credit report. What's the next step in the process? Is that where you get that pre-approval letter that you have?
At that point comes the pre-qualification. So what that means is your credit's checked out, the numbers you've gone over with the lender check out, and everything appears to fall in line with what the underwriting guidelines are for the particular loan you're looking for. The next step is we'll issue the pre-qualification letter, which will allow you to then communicate with your realtor to start looking at properties. But instantly the next most important step, in my opinion, is to start providing myself with the documentations to make sure your pay is what you say it is, verify the assets are in your account, to make sure your pre-qualification can then turn into a pre-approval based on asset and documentation.
So those documents just back up what they've already told you.
Correct.
So you got your paycheck stub, you'll have your bank statements. What do you need, 2-3 months of those?
Last 2 months bank statements, last 2 years W-2s, and last 2 pay stubs.
Okay, and that'll get you started on that process. So that's good. And here's a good point too. In today's market, if you don't have that pre-qualification or that pre-approval letter, a lot of times the sellers won't even entertain an offer. They want to have that in hand. So that's why it's so important to get in touch with Max.
And you want to know if you can afford it. I mean, people think I can afford a $200,000 house, but if you ask them, what do you think that mortgage payment's going to be on a $200,000 house, they'll have no idea. So it's really important to sit down, and what you are approved for isn't necessarily what you need to purchase as well.
Sure, you don't want to put yourself in a bind, right?
Can be approved for $300,000, but they're only comfortable with a $200,000 purchase price. So that's my role, to help get you comfortable with the price point you want that you qualify for. So,
and that's another point we were talking about earlier too. On that pre-qualification letter that we get, you want that amount to be what you make the offer on the property. So if you're qualified for a $200,000 or $300,000 house, the home you're looking at is listed for $250,000, and you put an offer in for $230,000 or $235,000. You want that pre-qualification letter to reflect the $235,000, because otherwise, then the seller will know that you're qualified up to that amount, so they're not going to come off it. So you're showing your cards. So you want to keep that to what you're making the offer on. You can always go up on it if you need to, but start it out there. Okay, so we've turned in all the documents for you. We've got the pre-qualification letter. You've verified that everything's correct. We've made the offer on a home. What's the next step for you?
The next step is to be very strategic in not to do any money moving. Anytime you move funds from one account to the other, we have to source and follow
Red
those
flag.
transactions. So
Right.
you want to keep everything in one spot. Do not get cash from anybody, even if your mother says they want to throw $2,000 to help with your closing costs. If mom gives you $2,000 in cash, do not just take that and put it into the bank, because that will then throw another red flag that we'll have to do a lot more documentation. So the big thing, no money moving, no employment changing. Don't switch jobs from a W-2 type of role to maybe a contracted 1099.
Right.
Don't switch from a set salary to an hourly employee. Don't change career paths.
Pay raises are okay, though, right?
Pay raises are perfectly fine.
Okay.
But you just don't want to do anything. Another big one, don't quit your job.
Right.
Even if you have another one lined up, if there's a gap there, that could cause major issues. As well as what you said earlier, no new cars, no
Right.
new credit cards, no anything that would touch your credit. Because most lenders will do what's called a pre-close analysis pull of your credit. It won't be a hard pull, but it'll be a pull to take a peek to see if there's any new activity that's gone on your credit report.
Okay.
And if there's an inquiry from auto company, whatever, we're going to need to find out the details of that loan. And that could cause your file to go from approved to decline.
Or take a lot longer process.
Correct, or
least.
verification.
Right. Okay, so we got pre-approved. We found the property that we're looking for. We've put in an offer. The offer's been accepted. So at that point, that's when you need to communicate with the closing attorney? Is it that point?
Right.
So you'll be talking to the closing attorney. Your realtor will be talking to the closing attorney as well. When we get all those in place, that's when everything else comes into play with your home inspection, your home warranty. And at that point, if we have an accepted offer, that's when the lender will order an appraisal.
Correct. At that point, once you have an accepted offer, we'll issue what's called a loan estimate form. So what this loan estimate form is our good faith estimate about all the transaction costs that's going to go on. So cost of the appraisal, an estimate on the attorney, an estimate on loan fees, everything like that, to give you the picture of how much you're going to have to bring to closing. Once you've received that from the lender, then you acknowledge that you're fine with that. You're going to sign what's called an intent to proceed. That's telling the lender, hey, I'm going to be your customer. Let's move forward. Let's take my loan to the next step, which then would be the formal underwriting, appraisal order, title order with the attorney, and everything like that will go on once you've received that loan estimate document.
So Max, one thing I want to point out here is the lender process seems to be the most confusing to some people, but there's a lot more working parts to it than some of the other things. But that's why it's so important to work with a lender up front, get all that stuff. I mean, you may be that close to being approved for a loan, and working with a lender and having that relationship up front, you can work with them and say, hey, look, you can't qualify for a home right now, but if you do these steps in the next 3 months or 6 months or even a year, whatever it's going to take, then we can make that happen. So that's one of the things that's great about lender is they will help you to get to the point that you need to get to. So
and to piggyback off of that, something else that's very important is to trust them. You want to be able to trust your lender, because if you hold back information, there's a good chance we'll find out.
Right.
If you had the bankruptcy 8 years ago, just let us know. I mean, don't think you don't want to tell us because you're worried it might affect it. You're better off telling us so that we don't have to be worried it affects you before closing.
And that could save you money too.
Exactly.
Because if something comes up and you order the appraisal, you're going to have to pay for it anyway if the bankruptcy comes up later.
Because we want to know, between ourselves and the attorney, there's a lot of research done on the individual borrower. So if you limit and don't disclose something to us, there's a good chance the attorney might find it in the title search, or we might find it in some of our fraud searches and Social Security verifications on our end too. So just to help prevent that from any, just be honest. Even if you think they don't need to know it, just tell myself just to make sure.
So the lender and the realtor are one of the first two people that you're going to work for in the process. So if you have any questions, make sure you reach out to Max or me, and we'll figure out how to get those answered for you. And we'll see you in the next video. Thanks for joining us, Max.
Perfect. Thank you.